Hey everyone, in today's video, we're going to be talking about what may be one of the craziest weeks of earnings we have this entire year in the stock market. We're going to go day by day talking about some of the key companies, key earnings reports that we're going to be hearing this week, going through their stock charts, how these companies' valuations have been moving, and what to expect, what earnings per share they should be forecasting and hitting, as well as what kind of multiples each of these companies are trading at. So, before we get into this, I just wanted to call out, if you haven't yet subscribed to my channel, please do so. We're still a small channel, so it really helps out a lot. Every subscriber, I really appreciate it. As well as give me a big thumbs up. It really does help with the YouTube algorithm and get these videos out to more people, which is definitely awesome to see. I really appreciate that too. So, going into Monday, every day we really have a lot going on here, but especially the first half of the week. Monday specifically, a couple of the top companies I'm looking at are Coca-Cola, which is reporting before the bell on Monday morning. And then after the bell, we have companies like Whirlpool, which is a really interesting company, and just um, how they kind of begin to give you some perspective on how commercial housing is doing, how the consumers doing, new housing starts in the U.S. are doing, stuff like that. But a big one, which is my number one position actually, is CN Rail. So I'll be really interested in that. That also serves as a bit of a proxy for the economy. So let's get into some of these stocks on Monday. And I'm going to try to keep it pretty short on each stock just because the number of stocks we have that we're looking at here. Don't want to scare you guys off too much with a 6-hour video. So we're going to try to be somewhat concise. But Coca-Cola is an interesting stock. They've really been running over the last month or so. They're up 7% on no news. In the last 6 months, up 12%. So this is really, really good results for a company like this, especially during a time that the market's been pretty iffy, especially looking back past 6 months. Just to show a longer term chart here, up almost 50% before the dividend over the last 5 years. So this company's been doing just fine. $277 billion market cap, paying just under a 3% dividend yield. If we look at the earnings that they are expecting for the quarter, it is about 64 cents a share. So pretty much in line with their normal quarterly cadence. They're expecting about $2.60 a share throughout the entire year. So if you just divide that by 4, you pretty much have your quarterly expectations. And if we were to just look at, hey, what is $2.60 a share on the year look for in terms of a multiple? Is a stock a buy? Well, at $2.60 a share, this company's trading, just doing some quick math, it would be $52 if it was 20 times. So we're talking, around $25 a share, or 25 times PE is the current year future PE multiple. So definitely on the rich side in terms of the valuation on this company. High 20s trailing, as you can see here, mid 20s future price to earnings ratio. Just goes to show that there's really been like a flight to safety in the market with inflation, how it's at, and companies with pricing power are just getting a premium on multiple. And I think we're seeing that here. So this is a stock that I don't think is going to blow up to the upside, but probably some downside risk if they kind of call out issue with margins, issue with cost of goods, stuff along those lines. The company went up this week behind Procter & Gamble having pretty good results, so they're already kind of going into earnings on a high. And over the last month, they've really taken off despite no news. So I'm a bit worried for Coca-Cola. I think they're really going to have to hit it out of the park to go up any. And even if they deliver a solid quarter, I still think there may be some downside risk. So this is one that I'm going to be watching closely. But I think they're set up pretty tough just given where the stocks ran before earnings. Going into the second stock here that I really want to talk about a bit today, it's CN Rail. CN Rail is a company that really hasn't gotten too much of a dip. You saw some of those other companies, and you'll see as we go throughout this, there's been a lot of volatility in the market in the last year. Not really with CN Rail, trading at the high side of their 52-week range, $166. We're up 5% over the last year. We're up 2% year to date. I can keep going. They're really just trending up over every time period here, 65% over the last 5 years. But if I go to 1 year, you can kind of see the company's been trading between $150 and $170. So about a 10% range, which isn't that big over the last year. They're paying about a 2% dividend. They grow that dividend every year like clockwork at a pretty high clip, about 10, 11% over the last 20 years is their annual dividend growth rate. It's a $112 billion company, trading 22 times trailing earnings. If I look at their anticipated earnings for this quarter and this year, if you just bear with me here, I'm not sure what's going on. But while we let that load, we can kind of just go and see the history of this company quarter over quarter. We're seeing pretty good net income growth. So we're going from 1.2, 1.3, 1.4 back to 1.4. So quarter over quarter, the company seems to be doing just fine. On estimates, they're expected to do about $1.75 a share, then $2 next quarter, just under $8 on the year. So looking at their stock, they do $8 on the year. They're really trading around, maybe like let's call it 21 times multiple because it was slightly less than that. Yeah. So 21 times multiple for this stock. I personally think this company has a great moat, great pricing power, great assets, has been executed greatly in terms of how they deliver shareholder value if we look at just their stock chart over time. So I don't mind this stock trading around a 20 times earnings. It's run up a bit recently, so I haven't been adding too much to my CNREAL portfolio. It's also a huge position for me. But if there's any weakness or anything like that, I'm going to look at maybe jumping on it and adding some shares of CNREAL. Okay, so without going into every stock I want to talk about on Monday, because that'll take us forever, we're going to jump right over onto Tuesday, which is probably the busiest day in the market. If we look at some key reports here before getting into the data, Verizon, that'll be a really interesting report. We saw postpaid mobile ads disappoint from AT&T last week. We'll see if that's broad or if Verizon just won a lot of market share. That'll be an interesting test for Verizon. UPS is always an interesting report for e-commerce and just the economy at large. McDonald's is a company that I own. I'm interested to see their reports. Going down more, PepsiCo is on the other side of the coin to Coca-Cola. So it'll be interesting to see their beverage results, but also their snacking results too. Spotify, we heard Netflix report last week. So we'll see how Spotify does. Netflix disappointed a bit on total subs, even though they're trying not to fixate on it. The investors still traded the stock down as a result. Then we got some big tech, Microsoft, Google. We got Visa reporting, which was one of my favorite companies. Chipotle, very expensive restaurant company. Tons of other names in here. So Tuesday, we can spend an hour on alone, but I'm going to try to just go through some of the top earnings that we got coming up on that day. If you want to hear specifically a post-earnings report on any of these companies, let me know in the comments. We'd be happy to post that video later this week. But the first one I'm interested in is just taking a peek at PepsiCo. I have similar thoughts on PepsiCo as I do on Coca-Cola. This stock has never really gone down. If anything, look, it's literally at an all-time high pretty much, just 50 cents off of it at the day range on Friday. So this company trading high 20s multiple as we look at their earnings per share, expecting under $8 per share next year, $7.25 this year. So if I go to $7.25, this company's trading, in the high 20s or in the mid to high 20s of what they're expected to be delivering this year. And then even next year, they're trading at, 25-ish earnings. So expensive stock. You get a 2.5% dividend on it. Solid business, lots of pricing power. But just given with how much these stocks have run even the last month here, I think there's probably more downside than upside if I was a betting man. So these are ones that I'm just going to be watching from the sideline on. Going into Spotify, this company has been on a tear, up 63% year to date, up 20% on the year even. These stocks rallied really hard during COVID and have been crashing since interest rates went up. So interesting company. I'm really going to be interested to see their subscriber and their average revenue per user statistics. I've never owned this company, but I've always been kind of interested in just their business and these types of businesses between Spotify, Netflix, etc. So this one will be interesting as we look at what investors are expecting from them. Go into their analysis tab here. So they're still expected to lose a lot of money this year, or not a lot, but about 1.5% of their market cap this year. So probably about $400 million. I think they're worth about 25 billion. And then next year they're supposed to get a lot closer to break even. But I think that's a very contentious average, right? You have some analysts saying they're going to lose a lot of money again. Some analysts actually think they're going to start making money. But even at this estimate of making money, it still has them trading at 50 times forward earnings, and that's the best case scenario. So you're definitely investing for the future and what Spotify and this platform can become, more so than what they're delivering to you today in terms of total shareholder return from dividends, buybacks, other types of investments. Going on to McDonald's. So McDonald's is another one, essentially at their 52-week or all-time high here. I think they're planning on making about $10 in EPS. Can verify that. But if it's $10 in EPS, they're trading at like 29 times earnings. There's a lot of things to like a bit more than $10. So they're probably trading like 28 times earnings current year, and then maybe 26-ish times earnings next year. The great thing about McDonald's that I've always liked is they own their entire ecosystem, right? I guess they have to deal with franchisees on the back end, or the front end rather, but they don't have to sell in pricing to retailers like PepsiCo or Coca-Cola may have to do. They can seamlessly adjust pricing and stuff like that. They just have to make sure they're having a model that makes sense for franchisees, which I think they do have. McDonald's restaurants are probably the most profitable relative to other quick service restaurants in their category. And this company with Coca-Cola, with PepsiCo, has just rallied over the last month. This one's up about 8%, no earnings, no real news, just, I guess, general sentiment around these defensive companies, how they've been able to combat inflation and the pricing power they give, have really traded these stocks up. McDonald's currently providing a 2% dividend, similar to those other names, increases their dividend every year. So potentially not a bad place to be in the long run, but, always feels better to get into these stocks when they're not at all-time highs, obviously. Going into Google reporting on Tuesday, this is going to be a really interesting report. So we look at the stock down 15% over the last year, up 18% year to date. This company's been back and forth with inflation, ad rates, Facebook privacy settings, and how that impacts their algorithms. YouTube performance has been up and down as they kind of come off of the pandemic, and then also all the AI buzz stuff with Microsoft. So I honestly think this is a company that has the ability to trade up or down significantly based off of intangible aspects of their report. It's not going to be all about the numbers and the earnings necessarily. It may also be heavily influenced by what they say they're doing with AI and how they're going to be evolving their search engine, etc. So current year, they're expecting about $5 in EPS. Next year, they're expecting $6. If I back that into their shares here, they're currently trading at 21 times earnings for this year. And then for next year, that'll probably look a lot more like 18 times earnings, according to analysts. So we'll see how all this develops. This is one stock that I have a decent sized position in, and so much going on with the company. Their continuation of trying to make cloud profitable will be a big thing that I personally will be looking at, because that would just be great to start building that third arm of the business into a profitable profit center, to not just, take money from the cash cow that is search. I think that one has a lot more potential than all the money they're burning in other bets. So that's of interest to me. Also, how they talk about AI and the evolution of their search business, just giving me some comfort there will be important. So I'll definitely be listening to this report. It'll be interesting, but this company, because of all the noise going on, is definitely trading at a much lower valuation than it has historically. And then the other stock that is trading on Tuesday as well, and we'll just try to get through these ones quick. Microsoft is on the other side of that AI conversation, up 2% on the last year, 20% year to date, mostly behind, lots of that sentiment um, on AI and how they're infiltrating all of their product offerings with AI, their investment in ChatGPT, maybe to a lesser extent, the fact that it looks like their gaming acquisition of Activision Blizzard may have a higher chance of going through than originally anticipated with some EU regulation wins. But that's only $60 billion, so it's hard to influence a $2 trillion company off of that news. I think this is mostly just AI, inflation stabilizing, the business continuing to perform okay. It'll be really interesting to see what Azure, their cloud business, posts as earnings, because that's out of the last quarter where lots of analysts downgraded these stocks, both Microsoft and Amazon, based off of a negative or a cloudy growth outlook for cloud businesses. In terms of EPS forecasts, they're expecting to do just over $9 this year, close to $11 next year. So at $9 this year, $9.35, I think this company's trading at about 30 times this year, 27 times next year. I think this is such a great business. I own this one as well. That I think that's a fair valuation. You're not getting a steal when this company was trading closer to 22 times or $220 rather a few months ago. Down here at the beginning of the year, I was adding more to my portfolio. I really like buying it in the low 20s multiple. Probably a 20 times 2024 earnings multiple. So unfortunately, we're not still there. So this one I'm just going to be listening to as an investor to see how confident I am on lots of the big strategic moves they're making. If they have any developments on the acquisitions they're currently making, and if they think those are going to close or not, should be an interesting call nonetheless. And also on Tuesday, it just keeps coming for Tuesday here. This is the last one I'll be talking about, though, is Visa. So Visa's gone on a bit of a run, up 13% year to date, up 11% over the last year. As despite the global economy kind of flattening out, we've seen lots of people still traveling in large numbers. And when people travel and use their Visa cards, it's more foreign exchange fees. Visa gets a cut of that. It really amplifies profitability for their business. Looking at their estimates, as we let that load, I'll go back. But this company is a super asset-light business. They continue to structurally grow every quarter pretty much. 7 billion, 7.2 billion, 7.3 billion, 7.8 billion, 7.9 billion. So you just see quarter over quarter, year over year, they continue to grow, and their profitability is insane. Their net income after tax is consistently about 50% of their total revenue. They're making 15 on 29, 12 on 24, 11 on 22. So you can get the picture. This is a great business model, very asset light and very profitable. They're expecting to make $8.50 in EPS this year, closer to $10 next year on the high side. So if we back that into their earnings here, $8. They're currently trading at about 29 times current year earnings. And then for next year, currently trading about 25 times, or if it's $10, they're currently trading at 23, 24 times. So personally, I think this is a great business model. I think there's a lot of upside to go in terms of cash moving into card. So this is one that I'm bullish on. Similar to some of the other names, I hate to buy this stuff at like all-time highs after it's run up in a huge way. Maybe not all-time highs, it hit that before COVID. But nonetheless, great business, great operation. They're operating fantastically, executing really well, return a ton of value to shareholders through share buybacks, continued dividend increases over time. So this is one that I'm really interested to see their report. I hope they stop going up so aggressively so I can keep increasing my position. But at the end of the day, your stock's going up in the grand scheme of things aren't necessarily a bad thing. You just have to look for another place to invest new dollars in. Okay, going on to Wednesday. So yeah, Tuesday, definitely crazy day. Didn't even touch on some of these. That'll be interesting. 3M has a lot of lawsuit stuff going on, so it'll be interesting to see them comment on it. But I think I hit the main ones that I was at least interested in. On Wednesday, lots of names reporting. Less that I'm personally interested in. Meta, I think, will be a very, very interesting report. We'll come back to that in a minute. But just going down the list here, Hilton reports before the bell. That'll be interesting. ADP is a big company. I've done a video on them before as well. That'll be interesting to see from a corporate spend perspective how they're doing. Teladoc's had some trouble. We'll see how they do and what they report. Same with Roku. But Meta's really the big one from Wednesday that I'll be watching. I think Meta as a company has so much potential to be worth so much more money if they just get really serious and walk the talk of this being the year of efficiency, making cuts or extending the timeline for investments in Reality Labs. Not really sure who they're fighting there to get this out so quickly. The world's probably not even ready for what they're trying to build, so I just don't really get the need to spend all this capital on it up front. So hopefully they kind of roll back spending there a bit. I think the stock would fly off of that announcement. They keep announcing cuts, which have propelled the stock over the last little bit. If we just go into their stock chart, year to date up 70%, over the last 6 months up 65%. I'm not cheerleading this company at all because they pretty much self-inflictedly delivered a 70% drop in their stock between end of 2021 and 2022. So they're off of a very low base here. Lots of shareholders have lost money, but I think they're kind of starting to speak more realistically, and I hope that logical rationale that makes sense will flow over into the call that they have this week. Looking at earnings per share, their earnings per share estimates expected to be $10 this year, $12.50 next year. So looking at their stock, trading at about a 18 times forward earnings, 21 times current year earnings. So let's see how their numbers and their guidance changes. But I think that is, a fair valuation for this company. I think they have the opportunity for that to go up a lot if they cut more spending and focus on Reality Labs and the metaverse. I think it's two-pronged, right? Like their earnings will go up significantly if they stop burning billions of dollars a quarter on that as an investment. So that EPS, instead of being 10 and 12, may go up overnight to 12 to 14 for 2023 and 2024. And I think if that's a less focal part of the story, the multiple will go up too from a 20 to a 25. So 25 times 12, you're looking at a $300 stock. That's almost 40-50% upside from here. I think that's very possible over the next 6 months or by the end of the year if they continue to operate well on their core advertising business, which is what this company is, even though it seems like they forgot that. And then kind of dial back some of their other ambitions and CapEx spend in other areas. So we'll be looking to see how that story develops in their earnings call this week. But this is one that I do have invested in over a longer period of time. I think I'm up overall, but definitely down from where I once was. And I just think this company has a lot of untapped potential, just given the rhetoric and some of the decisions they've made about capital allocation in the company. So I'm hoping that they continue to retrieve the value that the assets that they own deserve. Okay, going on into Thursday. To keep it short, the main companies that I'm interested in on Thursday are Amazon and Altria. A couple other interesting ones for those of you who may want to call or not call, but you may want to check out on Thursday in your calendar. American Airlines, Caterpillar, MasterCard. I think I'll get the story from Visa. They're usually pretty similar stories. Crocs, some retail investors own as well. Pinterest. Pretty sure Pinterest was on the verge of an acquisition or getting acquired 18 months ago or so, and nothing ever came from that. So it'll be interesting to see if those kind of rumors come up again. Snap, Intel, so lots of different types of businesses reporting. Two I'm interested in, Amazon and Altria. So on Amazon, this company has roared more than some of the other big tech companies lately, up over 8% on the month, was up over 3% on the day on Friday. up to $1.1 trillion. They announced lots of changes in their retail strategy. I think they're cutting lots of jobs at Whole Foods, but they're looking at expanding some of their Amazon stores in other ways. So lots of different announcements. Seems like the streets generally like them without going into all of them. Up 25% on the year. Wow. So this company is really coming off of lows. I think the reason the stock was so low to begin the year was because of just growth rate sentiment on AWS and cloud. So it seems like the narrative's turned around perhaps since the company's ramped up so hard. But that's what I'll be looking at as an Amazon investor primarily is what has AWS done in terms of growth rate over the quarter? Has it reaccelerated? Has it declined in terms of their rate of growth? So that'll be probably the main data point coming out of this report. Then just broader economic indicators like what their total Amazon system sales were for their e-commerce site will kind of give a direction of how they're doing from a market share perspective on e-com and how e-com is doing as a whole in terms of segment of retail in the US. So we'll be looking forward to all those numbers. Probably won't buy or sell any Amazon based off of their report, but lots of very interesting figures, both as a shareholder of Amazon, but then also just from an interest in the broader economy point of view that they'll provide. EPS on Amazon's always all over the place because their capex is wild in either direction. But currently, estimates are saying they'll make about 22 cents this quarter. Next year they'll make 250. This year they'll make 140. I don't really know what to do with that because they're just investing so much free cash flow or operating income into new vehicles or investments to grow the business long term. So I think if they wanted to, their earnings would be 2 times, 3 times what those numbers are. They're just deciding to invest in the business instead. So not really going to value the stock on a price to earnings ratio. Don't think that would be the best comparable or the best relative KPI for them in terms of their valuation. In terms of Altria has been, all over the place. This is a company that owns lots of cigarette brands. I've never owned the company. They do pay an 8% dividend yield. They try to get the money out of the company just because of how regulated the space is and how prone to lawsuits and stuff they are. But we can kind of see here, they're down about 20% over the last 5 years. Your total shareholder return's probably not good, but not terrible because they probably have been paying a 6, 7, 8% dividend over this time period. So probably gotten 40% back in distributions. But nonetheless, not fantastic as less people have smoked. They are also, going back and forth on what the future of this category looks like. They bought Juul. It was a disaster. They just bought a separate vaping company, I guess we'd call it. Sorry, I'm not a smoker. Vaping company that is a bit more friendly with regulators. So hopefully that one works out for them. But this is one, just from a valuation standpoint, I think this is even overstated, that trades at a pretty cheap price to earnings. Let's look here what they say their estimated earnings on the year are. And while it's already loaded. So $5 this year, and then 5% growth to $5.30 next year. So at $5, this company's trading at just over 9 times earnings. Given the type of products and the low growth in this segment, I think that's probably a fair valuation. To be honest, you're getting a low double-digit free cash flow return from a shareholder perspective, and then you're getting about 80% of it returned to you in a dividend. The other 20% of the cash they're generating probably going into R&D or different growth vectors. As we look at their just annual revenue, we got $20 billion in 18, $20 billion in 19, $21 billion in 20, $21 billion in 21, $20 billion in 22. So you're seeing it really flat, and then the earnings really jumps around a bit depending on everything that's going on. So really flatlining company. You are getting a decent free cash flow return though, and lots of that paid out in the dividend, but definitely not a growth stock by any means. So I always find it interesting to see how these kind of older boomer stocks do. And at the end of the day, there's value in all these companies as long as they're generating free cash flow. It may not have as bright of a future, but if the P is low enough, it makes sense to grab that cash flow today, and you can invest it in other growth opportunities in other areas of the market if you want. Okay, and then getting into Friday, the last day, the least exciting day of the week in terms of earnings. The one stock I just wanted to call out here was, you can call it ExxonMobil, you can call it Chevron. Either way, it'll be interesting to see how these oil companies do and perform next week. The one that I just highlighted here is Exxon. These companies have been flying up over 40% over the last 1 year, paying a decent dividend, low price to earnings. So we'll see if they're cranking out of profits have continued over the last quarter as oil prices have remained high, and lots of the production on this side of the world has done pretty well. So just interesting to see how Exxon and Chevron and those companies do on Friday. But other than that, that's it for this week. Sorry for the long video. I tried to make it as concise as possible, but it was just so many stocks reporting. I'm extremely excited for what this week has in store. Let me know in the comments if I missed any of the companies that you're really looking forward to their reports next week. I'm sure this chart doesn't even encompass all of them because it's already so full. But yeah, this is what we live for. Those who follow the market very often. It's great to have so much news and sure so many announcements in these reports. Really looking forward to it. And if you like this type of content, please give this video a thumbs up and subscribe to the channel. And if you made it to the end of the video, would really love to hear from you in the comments. Most people don't make it to the end, so I really do appreciate you. Thank you guys for watching, and I'll see you guys in the next one.